thank you for having me here. And as you mentioned, so I'm leading for Natwest the commercialization of VRP, which is a nice intellectual and operational challenge for me, because again, is a broad topic in which everyone has a lot of opinion in terms of what to do and how to do VRP. So digging into your question, I think I'm not going to add anything that is so controversial or different from what you will hear from other banks. So as you know, for us, sweeping is so we have been mandated to implement sweeping, and we have been active in that space from the early days. So from 2020, working with the regulator in terms of defining the standard, defining the requirements. So we have been part of those conversations, and then for sure in 2021 we kick off the implementation of the sweeping capability, and last year was also important for us because for sure implementation went in parallel with all the governance activity we will need to do every time we are introducing a new capability. And for sure this year we just started. So we recently, a couple of months ago in September, we exited successfully the managed rollout, and I think we were probably the third bank exiting managed rollout. And in the first month of now that the sweeping is completely live, we can see that there are some interesting number volumes in terms of transactions. So we see that, I mean, this proposition is starting to roll out. But I think the big opportunity with sweeping is yet to come, because, and I think probably by chance, but I mean, I think sweeping will be more and more relevant, especially considering the current market condition. So again, high cost of living, sweeping can be a nice tool to help customer on minimizing the cost of financial products, especially those customers more vulnerable, more likely to go on overdraft. And again, I think there is a social element that sweeping can play here. And for sure, there is another one in terms of helping customer, educating customer on taking the best financial decision. Where again, in a scenario, in an environment now in which there is a higher cost of credit, it start to make the difference of moving money from an account to another savings account to optimize. So I think I would summarize that, yes, we have done everything that we have to do because, again, rightly so, the regulator have indicated us what to do in terms of sweeping. But I think we have now a very powerful tool to be even more purpose-led for our customer.
Yeah, fantastic. And I think you're right. This couldn't be more timely with the cost of living crisis for creating a really valuable tool to help all of the financial insight that open banking enables become financial action through being able to act on the insights. It's really important. I guess one of the things that's been most headline grabbing is the move beyond sweeping though. Yeah, you guys have been in the news a lot recently with announcements around partnerships with many of the PISPs and third parties to look at leveraging VRP beyond that sweeping mandate. I wonder if you could, again, just tell us a little bit around how that's going. What have been some of the challenges? Where are you up to in the process? Obviously, we'll get into the weeds of all of this in the panel discussion, but kind of a high-level walkthrough how that's been going would be really helpful.
Yeah, no, that's a good question, and I think echoing what Helen said, so I think that's probably the key topic that in the open banking arena we want to explore and we want to discuss. So the long and short is, for us, VRP, I'm talking about the commercial part of VRP, so non-sweeping, is an opportunity. And luckily enough, so we spotted this opportunity early days. Has been an easy journey for us to find an agreement within the bank? No. I mean, like every bank, so we have a lot of stakeholders, we have a lot of different objective and point of view to align. But I think what have been at the very, very center of our decision in terms of, yes, we will enter into the VRP market is pretty much the benefit and the customer benefit. So what we have tried to do is, and what we tend to do at Natwest is putting the customer always at the very center of our decision. So again, I'll try to bring into life what I mean is, I think for us is important has been important to bring to life that, yes, customer might use established payment method, cards, direct debit, standing order, but those are not perfect payment methods. So those payment methods have some gaps in terms of the proposition. So I don't know, cards, direct debit, they might be open to fraud initiative, because again, you will need to share so you as a customer, you will need to share personal information. The other one is in terms of a journey. So yeah, every one of us purchase goods online using a credit card, but I mean, sometimes the journey is a little bit clunky because customers are asked to are provided with a unique PIN. So the point for us is VRP can be the product that can unlock and can solve all those gaps. And therefore, putting customer at the center has led us to say, this is the right thing to do. On top of that, I think the other two considerations we have been taking have been on an investment point of view. I think VRP is a non-regret decision. So the technological capability is the same as weaving. So it doesn't require entering into the VRP market, doesn't require to spend more money in terms of implementation. So for us, it was just a matter of can we maximize the investment we are already doing on a regulatory point of view to start to have some potentially some return. And then I think the last one was thinking that for us VRP, so for us the VRP market, so we think VRP is going to happen. So it's more for us it's more a participation choice. So how do we want to participate to this market at what point in time? And therefore our call has always been let's start with something. We can go live with something even if there is not a perfect liability model, but there are some sweet spot of use case that we can start to introduce now without having. Still, we are waiting for the regulator to provide us more information in terms of how to manage liability or to manage this. So those are pretty much the key driver for us.
That's really helpful, and I think that's set a lot of context for the next conversation we'll get into as well. Perhaps one last question before we bring in everyone else. I mean, this is, I guess this is the first at-scale API that is starting to be commercialized. What do you think this means for sort of open banking and how banks are leveraging open APIs more generally? Is this the first of an ever richer suite of capabilities that banks can start to expose that go way beyond compliance?
Yeah. And I will try to answer this question looking both at VRP, but also what is beyond VRP. And I think this will also nicely fit for what we said before in terms of Natwest and Bank of API, in which we have a suite of API product that can support, let's say, the digital economy. So answering on the VRP space, I think VRP is just a smart way to move money. And rightly so, for customer, payment is a commodity. If we think VRP as the first step to build a more seamless, one-click, almost zero-click payment experience, then I think then actually we are unlocking the opportunity. So we are doing something that is, we can create something that is value added, and therefore also in terms of commercialization discussion, it became easier to ask for whatever is the price, because again we can provide some value. And linked to this one, so therefore what I'm trying to say is if we look at VRP, yes, it's great, but if we can add on top of VRP all our data, all our customer data, how fantastic will be a journey in which a customer, I don't know, need to buy something online, and with an API call, we provide all the information of the customer, where the goods need to be shipped. And plus we are adding also VRP capability to allow the transaction to be finalized, to pay. And I think that's probably what we see above and beyond VRP, and more farther away. What I think for API in general is, in my opinion, API can be the tool that will unlock us to deliver embedded finance. So embedded finance for me means we will sell our financial product at point of customer need. So if a customer need, I don't know, a line of credit while they are on a card retailer website, we can sell we can offer our product there, and API is the tool that will allow us to enter into that space. So I think, in my opinion, that's the future. But yes, we are probably a few years away from there.